and it's absolutely wild. It's crazy. Like, it gets better and better and better. Hey guys, Kane here from Source Estate, and this time we're going up north to find some incredible property investments. I have some property sources up there that I'm working with that are finding just the most ridiculous deals. Properties are so cheap, and the kind of property strategies you can do up there are ridiculous. So I thought for this episode, we're gonna go check out some of the properties up north in Grimsby, which is like northeast. In fact, I'll show you on a map. It's northeast England if you don't know it. Hang on, here we go. Ooh, zoom out. And the further up north you go with these properties, the more interesting strategies you can do. So with this episode, we are looking at a property that I found. It was the first one that I looked at on Lime Street in Grimsby. And if we have a look at the photos, we can clearly see it is a terrace property and it needs a ton of work. It needs a new kitchen, bathroom, and new flooring, plastering. It needs the whole works. Now, I know the refurb costs up there are a little bit less, so I've accounted for that in my calculations. But let's go through the numbers and find out if this is a good investment. So this property is on for 48,000, but it doesn't matter what the guide price is. What matters is what it's actually worth. And to work that out, you need to find out properties that are within the area that are either in a similar condition or an end condition. End condition is more important to find out what the property is actually worth and what it can sell for. So just like a cooking show, I have done them here already to save you some time. So these ones here are the current market comparables, and if we have a look at some of these examples here, we can see that the inside of them are relatively, it needs updating. The kitchen of that one actually doesn't look too bad, but we can see that bathroom needs to get redone. And here's another current market, again, terraced property within the area. This one, absolutely, the whole works need to be done. So, yeah, good examples of some comparables there. And then we got some end value comparables as well. Again, terraced properties within the area, and that's a very nice standard. And what about this one as well? Here we go. So we have some amazing comparables. If you want to do it yourself, what you need to do is go on Rightmove. You need to look at properties that are similar to yours that are within the area, and then you take the sold price of it, and then you find out the property size, like square footage or square meterage, and then you divide the price by the square meterage. That gives you the price per square meter, and then you find 5 or 10 of those, and then what you do is you average them up and then times it by the square footage of your property or the property that we're looking at. And if we do that here, we can see that we get a GDV of 67,000, which is fantastic. Our property is currently on the market for 48,000. So there is, it's not been priced at the same price or over it, but that's a very small amount of wiggle room for build costs. On top of that, if we compare the current market comparables, we're actually looking like it's been overvalued. Currently, all the other current market valuables, if we take their average square footage, and I would say our property that we're looking at is actually in a worse condition than a lot of those. I think there was probably 1 or 2 that were pretty close to what we've got, but the others weren't actually that bad. And this is 13% above the current market comparables. So this property is currently being overpriced, but there's still some room in it. So let's keep going. The next thing we need to do is we need to look at the build costs. So again, I'm not an expert when it comes to the pricing up north. It could be a whole lot cheaper than this, but I've taken a bit off my usual build costs, and I think I'm within the region, right? So I've done new flooring, plastering, repaint, rewire, kitchen, bathroom, boiler, windows. I didn't do windows actually, doors and a garden. And that brings our total GDC or gross development cost to £33,000, almost basically £34,000. So what does that bring us to? Well, with a purchase price of 48,000, if we did that kind of refurb and then it was valued at 67,000, we would actually be losing almost £20,000 of profit. So in terms of it being a flip, this would be an awful investment. right? There's no money in this to be made if you wanted to do it up and then sell. So immediately I'm thinking, oh, give up on this property. But that's not the only property strategy there is. And up north, there are so many more interesting strategies you can do. Now, I won't go into all of them in this episode, and we don't actually have a floor plan of this property, so I can't really do a better analysis in terms of, maybe some title splits or maybe turn it into an HMO. So what we'll do is we'll look at it as a buy-to-let, and Grimsby is by the beach. So we'll look at it as a serviced accommodation, which is where you rent out your property by the night. So this property in the area, I was getting rents from around 450 to 650. So I've gone in the middle and I said that this probably rent out for about £500 a month. If we take off 10% for maintenance, 12% for management, then that leaves us with a profit per year of 4,300, which, based on all the money we've put in £86,000 into this property, gives us a return on investment of 5%, which is, like, if you compare it with the South, it's phenomenal, really. With that return on investment, we're getting double what we'd normally get as a buy-to-let. And if we was to, like, let's say we didn't account for the management and the maintenance, so we just got the yield, we're getting almost 7% yield. You'd actually be able to pull out a lot of your money and still be, in fact, you could pull out 75% of your money. So we actually only leave in £35,000 into the deal and we pull out 50,000, right? So we actually pull out the more than the amount we actually paid for the property. We leave in the refurb cost of like 35,000. But even with that, we're getting a return on investment of 3.6%. Profit of £1,291 a year, right? So I know we're only getting a profit of 1,300, but you've managed to pull out 50,000. You can just buy another property with that, right? And 3.6% is still better than you'd get in the South in terms of cash flow. So that's interesting. But now let's look at it through as a serviced accommodation. I've just done the numbers for the serviced accommodation and it's absolutely wild. It's crazy. Like, it gets better and better and better. So if we have a look at my report on this particular area, the average daily rate for this kind of property in this area is £95, which, it's surprising, right? Because in the South, property prices are way more expensive, but yet these are the same daily rates you'd normally get down here. So the daily rate is £95. Occupancy rate for this area, 75%. That's crazy. 75% occupancy. And if we punch those numbers in, now we're getting crazy numbers. We're getting a profit per year. If you were to take off some money for maintenance, booking fees and management, we're looking at getting a profit of 13,000, right? 13,000 a year profit on a £86,000 investment, which means you've got a return on investment of 15%. 15%. And it gets better because same thing with a buy-to-let. If we wanted to refinance the money, the more we refinance, the better the return on investment gets. Because you're making so much money, more than the mortgage would go up. You could pull out 75%, £10,000 profit, nearly £10,000 profit, but your return on investment is 27%, which means you're going to pull out your last remaining amount of money in just over 3 years. So that's great, but it gets even better. So what you can do if you run a business as an HMO or a serviced accommodation, right? Like if you set up another company, have a serviced accommodation or HMO company and have that company lease the property. So you have two companies, one holding the property, one actually with the company. You own both of them, but one's doing like all the trading and one just holds the property. If you get that dynamic working, what you can do is after a year of having this property and you can prove that this generates £13,000 a year, right, in profit, and this company is leasing the property from you, you can then get a commercial evaluation on the property. The commercial evaluation on this property, you hold it for a year, is £153,000. So you almost double your your total money in, your total investment after just a year of having the property, on top of getting a fantastic cash flow, on top of being able to refinance. And what you can do with that commercial evaluation is you can just refinance at that rate, right? Now, I haven't done the numbers for that, but easily pulling out an extra 20 or 30,000 pounds out of this deal if you do that method. So there we have it. They're the numbers. If you were to flip this property, it'd be a terrible investment decision. But if you was to rent this out buy it, put all the money in, rent it out as a serviced accommodation, wait a year, get a commercial evaluation on it, and then pull all your money out, plus an extra 20, 30,000 pounds, the property strategies in the north are ridiculous. And I have deal sources up there finding deals like this all the time. So if you're interested in getting your hands on some amazing opportunities, then get in touch. Go on my website, sign up. We will also give you a free flip analyzer spreadsheet just as a gift, and book a call with me so then we can work together and I can find you investments just like that. So thank you so much for watching the video. I appreciate you spending some time. If you enjoyed it, feel free to subscribe and like. And if you want to see more of this content, or you have an idea of where you want to see particular property investments, be finding them and calculating the numbers, feel free to just put a location of where you think would be an interesting idea to do an episode on this. But yeah, thank you for watching. I appreciate it, and I'll see you in the next one.